Hi there, welcome back. You're watching Market Fatafat right here on ET Now, a show where we get you all the stocks buzzing based on news flow as well as on technicals. And talking about technicals, now we have Dhwani Patel joining us on the show. A very good afternoon to you, Dhwani. Thank you so much for joining us on ET Now. Tempted to say it looks like the second half of Market Fatafat is lady special. But yes, Dhwani, let me come to you. Let's talk about Infosys and what's happening with all the IT counters. All of them are rallying in trade. Infosys leading from the front as well. But over the last 6 months, yes, a pain point, a lot of pressure coming in for the IT sector. Do you think now the pain is behind us? Time to look at these counters afresh and the time is now?
So when we're talking about IT counters in particular, we've already been seeing some sideways move, and in the past few sessions, let's talk particularly over here from last June mid, we have been seeing an upward rising channel in this particular sector completely, which is almost like a 55-degree regression line that if I make over here, and a 5% of a bracket in which we are constantly moving upwards with every dip in this particular sector. When we're talking about the levels of this sector overall, the Nifty IT index is giving a breakout of this channel on the upward side. So momentum is definitely picking up in this counter, and in the last 2 days we have already seen that this sector has been outperforming all the other sectors. Infosys in particular over here, it comes on the technical radar for the reason being that the gap which it had given on the bottom side has closed in today's session, and we are expecting further up move to continue in this particular counter from the current levels, with results also around the corner in the coming week. A little cautious, view comes in this particular counter. On the upside, we are looking up at 1470 as a next target, and trailing stop loss over here comes at 1380.
Okay, keep an eye out on those levels for Infosys, and like Dhwani mentioned, results coming out next week for this IT major. Let's move on and talk about Aarti Industries. And Vamakshi, why have you picked up this one for us on the chart? As of now, the stock is holding on to 1% gains.
Well, Vinny, the stock is in focus on the back of a brokerage note, and contrary to that gain, actually Morgan Stanley has maintained its equal weight stance with a target price of 458 per share. And what they are highlighting is that the demand conditions remain quite challenging for this counter. They see limited respite for Aarti Industries in the first half of FY24, and in fact they do believe that the margins could see further headwinds ahead. They see more downside risks to earnings amid limited visibility on the near-term recovery. So not so positive note coming in on Aarti Industries. Yes, the stock is up nearly 1%, but keep in mind that the stock is actually trading very close to its 52-week low, and that is the news flow surrounding Aarti Industries. Morgan Stanley maintaining an equal weight call, and the stock is up in trade.
Okay. Let's keep an eye out on Aarti Industries on the back of Morgan Stanley's note. But let's move on and then talk about Deep Industries. Why is this one in focus? They've announced that it is going to be entering into a joint venture agreement with Eurogas Systems, that is EGS, to supply oil field equipment to the oil and gas industry. Furthermore, on the exchanges, they also said that, they will be entering into this, and this is for the purpose of submitting the bid and tender of qualification for carrying out the business of supplying oil to the oil field equipment for this gas industry, and that is going to be in India. So on the back of that, today we're seeing Deep Industries is trading with gains of 5% as of now.
Let's talk about a stock that reported its earnings yesterday post-market hours, and that is Tata
Actually,
Metallic.
I'm surprised, sorry to interrupt, but I'm surprised that we finally came out with a number after half the show was over.
Exactly, but we'll wait for next week, and that will be only earnings heavy week, I'm sure about that. But Tata Metallics, if you look at this particular account, is reacting to its earnings. But if you look at the QOQ performance, it has been pretty dismal coming in for Tata Metallics. 29.8% downtick on a quarter-on-quarter basis for the revenue coming in for this particular stock. If you look at EBITDA as well, saw a decline of about 63%, coming in at around 34 crore rupees on sequential basis. And PAT, what a performance! The PAT has come down only just 5 crore rupees. This against 56 crore rupees on a quarter-on-quarter basis. So on quarter-on-quarter basis, definitely the numbers are not looking good for Tata Metallics. The EBITDA margin also sharp contraction, 5.2% versus 10.1%. But if you look at the stock, it has shrugged off those quarter-on-quarter pain for what the performance has been, and holding on to mild gains of about 0.3%.
Absolutely. Mild gains for Tata Metallics as of now. I was surprised seeing that profit number over there as well.
Exactly.
The sharp decline there. But let's move on and talk about Z Entertainment on the charts then, Dhwani. How are you looking at the performance for this one from here on now? Last 1 month, the only 6% returns is what they've managed to give. We've seen a bit of an uptick coming in just the last 2 weeks, we could say. But what is the overall indication on the charts for this one?
So what we're seeing over here in this particular counter is that since 2020, we've not seen much of gains coming in out on this counter, but there is some respite that's coming over here where 190 is acting as a good support level on the bottom of this, and chartically this stock has taken a good support at this point in time. And on daily chart also, if we see super trend as an indicator has given a positive move over here in the past few sessions. So from the current levels, one can go long into it. A short-term target over here comes at 230, where 190 would act as a good support.
All right, let's move on and let's talk about Wipro then, Ashesha. And how are the numbers for Wipro coming in? What are the brokers saying for this particular counter? Because this one also is seeing good gains in trade.
Well, yes. In fact, the entire IT pack is gaining in trade today, and Wipro, as we speak, is up over 2.5%. Mixed set of numbers. Revenues were slightly below what the street was working with, but operating margins were very strong in the quarter gone by. Constant currency decline of about 2.8% is what we saw versus 2%. That is what we expected. Margins, meanwhile, came in at 16% versus expectations of about 15.9%. Bank of America, meanwhile, has come out with a note where they are maintaining their underperformed stance on the stock. They've gone ahead and cut their target price to 350 from their earlier target of 360, a marginal target price reduction. FY24 revenue trajectory is likely to be flat, is what Bank of America Securities is saying. Nomura, meanwhile, is maintaining its neutral stance. They say second quarter guidance shows weakness is expected to persist for some more time, and margin improvement is unlikely in the second half of FY24. So largely mixed set of numbers. The stock, of course, in line with the entire IT pack, is moving higher, 2.5% higher in trade for Wipro today.
Okay, that is Wipro, but let's go across and listen into what the management had to say in terms of their strategy and the growth going forward as well.
It continues to be a market where, there's demand. There are deals in the market. We are closing more deals than we typically would have closed some years ago. We are closing large deals, and at the same time, the volume of discretionary spend has reduced.
From a margin range standpoint, as you've seen, we have kept margin in a stable territory in quarter one, and we will keep the margin in this band as we move forward. And the levers that we have are traditional but very important levers around how we manage our pyramid, and I can tell you we have significantly greater percentage of next-gen associates as part of our delivery pyramid than what we had 4 quarters back. We have improved utilization even as we had the volatility in revenue in quarter one. And we are continuing to drive automation as a key theme in our fixed price project. So these are the levers which really comprehensively address our cost of delivery.
Management of Wipro on their earnings. But Vamakshi, let's talk about Lemon Tree and why is this particular counter in focus today?
In focus today on the back of a source-based news that we broke just this morning. Orica MIAL is expected to be operational in 2-3 months. Now, keep in mind that this will be the biggest addition to the company's portfolio. It is expected to have nearly 669 rooms, and in fact, the street is expecting the margins as well as the ARR as well as the product mix to improve from here on. There are a few other triggers in place as far as Lemon Tree is concerned. They're targeting 50% margins and 64% channel share for retail segment. Corporate restructuring also seems to be on the cards, and in fact they're planning to list Fleur Hotels to unlock the value that they have. So on the back of this news flow, it is the source-based information, and that is the reason why Lemon Tree is up and away in trade today, trading nearly 1.5% higher.
Okay, let's move on and talk about Graphite then. And Dhwani, on the charts, what are you expecting for Graphite now? Should we expect a run-up over here in Graphite in the last 6 months, 11%? Last 3 months specifically, we're seeing a sharper uptick than when you look at it since April. So what are the charts now indicating for this one? Last 3 months, yes, that's the chart there. 51% return in just the last 3 months.
Yes, absolutely. So what we are looking further down is also a up move that must continue in this particular counter. Overall, the technical indicators are suggestive that the stock will continue its momentum on the upside. We are looking up at Fibonacci levels of 38% to be taken up now, which is coming around 470 levels over here. We're already up by at 23.6% up in the Fibonacci. So the support level here now comes at 390 for a target of 470. What is also noteworthy is on 20th of July, we have ex-dividend also coming in Graphite India. So that is about 8.5 rupees coming in over there. So that's also one of the reasons why one should bet on this particular counter.
Okay, surely keeping an eye out on graphite. But let's move on and talk about Titagarhi real, and why is this one in focus? What we have seen now is that in a bulk deal that we've seen that small cap world fund has actually acquired 76 lakh shares in the company, which is representing around 5.9%, almost 6% stake in the company of the share capital. And on the back of this, that we've seen that the stock is buzzing in trading with gains of almost 1% of trade as of now.
All right, moving on, let's talk about Angel One, and this particular counter is in focus on back of its earnings. If you look at the performance of this company on a year-on-year basis, it has been good. If you look at the stock, it saw an uptick of as much as 3.4%. The profit saw an uptick of about 22% on a year-on-year basis, coming at 212 crore rupees. Revenue from operations, 18% uptick, 808 crore rupees. Also, the total client base rose nearly 45% on a year-on-year basis. They've also declared an interim dividend of about 9.25 rupees per share. But there's something very key to note. While their year-on-year performance has been good, Vinny, their quarter-on-quarter performance has not been good. And that actually could be the reason why the stock, after opening with a gap up, has actually given up all its gains. Now it's down about 1.9%.
Absolutely. That weakness was on the quarter-on-quarter basis, and that is what is there in terms of the client base. And overall, when you look at it as well, that has impacted the numbers over there. But let's move on and talk about Chalet Hotels then, Vamakshi. Why have you picked out this one for us today? What's the news flow here?
Well, when we look at this counter is reeling under pressure today, and that is on the back of a source-based information that has come in from Infosys, and they had said that GST officials were conducting searches at Chalet Hotels office as well as hotels. So that is the news flow surrounding this counter. Now keep in mind that it is a source-based information that has come in from the Infosys, and that is the reason why we're seeing some pressure in the stock. The stock, as you can see, is down nearly 1.3% as we speak.
All right, let's move on then, Dhwani, and let's talk about MapmyIndia. And how is this one looking on the charts to you?
MapmyIndia on the charts is looking definitely a good bet over here from the current levels. We have seen in the past few weeks that the volumes are picking up in this particular counter. What we are seeing in today's session is that on a weekly basis, we are moving above 200 period of an exponential moving average, which is 200 weeks of an exponential average. The price is beating that particular average in today's session. And on a daily chart also, what we are seeing is it's forming an upward rising channel from the current level. So one can go long into this particular counter. The next targets positionally in this counter are of 335, and a stop loss over here one must maintain is of 285.
Okay, keep an eye out on those levels for Nippon Life. Let's move on and talk about MapmyIndia, Shesha. Why is MapmyIndia in focus today? What is the news flow here today?
Yes, the stock in fact is seeing a solid uptick of over 7.5% as we speak. Now remember, satellite launch service providers have been in focus for the last many trading sessions, and government is expected to hand over satellite launch services now to private players. Some exemption on GST has also been provided in order to encourage these private players to go ahead and be a part of the satellite launch services. And the company is also a member of the Indian Space Association. So all this is auguring well for the stock, and that is the reason the stock is surging in trade today. The company has also given solid guidance for FY 30, where they say that they are aiming to generate about 1,000 crores revenue by FY 28, which will imply a CAGR of nearly 30%. In fact, we did speak to the management earlier in the day, where they said that they are pushing for satellite launch services. That they see this as a fillip to the company's products as well as services.
Actually, this democratization of satellite technology, and especially downstream applications, which are the largest value share of the value chain in the space industry, is happening. Has been happening organically, but also is getting a fillip because the government is kind of pushing satellite launch services, both in terms of reducing or removing the GST, but also encouraging more private participation, which means more satellites. Now, Earth observation satellites, positioning, navigation, and timing satellites, and communication satellites. From MapmyIndia's perspective, because our Mapples app, as you can see, which is free for users, all our enterprise solutions, all our IoT devices, all are leveraging these types of satellite technologies to create applications which benefit users. So we see this as a fillip to our products, our business, and ultimately the value being given to consumers who use the Mapples app, or to enterprises, both in the government, defense, as well as in the private sector, who use our geospatial analytics, who use our satellite imagery analytics, who use our GPS and Navic-based IoT devices. So it's taking time for Indian companies, and those especially in the value chain of the space or geospatial sector.
Right, that is the management of MapmyIndia, and that indeed is an ET Now impact. Actually, post the management appeared on ET Now in the interview, you saw the stock actually see a good uptick. The fact that they spoke about what this means for their company. But Dhwani, let's come to you. Let's talk about Piramal Enterprises and what a silent mover and what a move it has been for Piramal Enterprises. Actually, shocking all the participants the way the stock has moved up. Where do you see Piramal Enterprises headed from here on, from these levels now?
It has just begun for Piramal Enterprise. It's been a silent mover till now, but we will be seeing some volatile moves and trending moves coming in this counter from now on, because on a weekly chart what we are seeing over here is a relative strength moving above 70, which indicates more of strength coming into the uptrend from the current levels. We are also beating all the averages on the higher side with the price and from current levels also one can enter into this particular counter. The short-term target over here comes at 1150. The stop loss one needs to maintain here is of 975.
All right, so that is the view coming in on Piramal Enterprises and the stop loss that one needs to keep on this particular counter. But let's move on and let's talk about M&M Financial and why is this one in focus, because Ambit has come out with a note and they're maintaining their sell stance on their company. They're saying that since the last update, the stock has actually rallied approximately 30% with a cumulative gain of approximately 40% in the last 6 months. But however, what Ambit is saying that they are not too bullish on the way the company is moving. They are saying that the valuation seems to be expensive for the company. Also, what they are saying, they believe that the earnings will go ahead and undershoot the expectations by about 16 to 20% over FY 24-25. They're saying key challenges for the company is meeting consensus expectations. Also, one is the lower AUM growth of about 19 and 16% in FY 24-25 due to decelerating auto industry volume growth. This is because of high base and demand slowdown as well. They're expecting a NIM compression also in FY 24 due to the upward repricing of liabilities and asset yield pressure. They're also saying upward normalization of credit costs, approximately 1.8% given limited the provision reversals. Therefore, they are still maintaining a sell stance on M&M Financial, and you can see the stock also is declining in trade today.
Eye out on M&M Financials. But let's move on and talk about SPARC. And why is this one in focus today, Vamakshi? What is the news flow here? Because the stock is buzzing in trade.
Well, Vinny, SPARC is definitely sparkling in trade today after the US FDA issued a complete response letter for the new drug application that is in NDA rather for PDP 716, and this is mainly on the back of inspection findings at the third-party active pharmaceutical ingredient manufacturing facility. The FDA did not raise any issues with the PDP 176 clinical efficacy or the safety, and apart from that, no additional clinical data or trials have been requested. So this is a positive news flow for SPARC. The stock is definitely sparkling in trade today, up nearly 3% as we speak.
All right, so that is SPARC and the reason why it is seeing an up move in today's trading session. But Dhwani, where do you see SPARC headed in the near term?
The stock already is in an upward trajectory and we are further seeing up moves coming in on this one. All the time frames suggest that the stock would make an upward trajectory, which would be a very strong momentum trajectory from here on, because the directional moving index over here is moving above the level of 30 now, and that suggests that the direction would be continued and with further momentum coming in on this particular counter. The short-term target one could look over here is of 260, keeping a stop loss at 205.
Okay, let's move on and talk about the next one. And Ashesha, JBM Motors, the stock that you've picked out for us today. Why is this one in focus? Why is it buzzing in trade?
Win is the reason this counter is in focus today. It in fact is soaring in trade today, nearly 13.5% higher in trade as we speak. The company has won orders for nearly 5,000 electric buses which are to be supplied to state governments. And the commentary that has come in from the management is also quite positive. They say that with a healthy order book in place, the company is well poised to further consolidate its position in an end-to-end electric mobility solution provider. They also said that the company is ready to serve the emerging market requirements in the electricity domain, thereby gaining market share access and expanding its market share. It's a strong positive commentary that has come in from the management, and the fact that the company has won orders worth about 5,000 electric vehicles is why the stock is gaining in trade today.
Okay, let's move on and talk about the new debutant on the D Street, that's Senco Gold, and surely shining and glittering kind of a performance is what has come in, a debut that has come in for Senco Gold at a premium of around more than 30%. It's what it listed at. 36 to 37% was the premium listing.
Approximately 40%, you could say.
Approximately 40%. Let's go there. And as of now, also 30% is what it's holding on to in terms of gains over there. But Senco Gold, they are a jewelry retailer which is based in mainly in East India, West Bengal, where they have most of their revenues that come in from there. But the company management is also highlighting in terms of the growth strategy that they have, that they will continue to focus on the eastern and northern region a bit more, and then maybe later on in the long term they will focus more on the west and the southern region as well. They do have some of their retail shops in the west and south, but main focus has been in the east region of the company. Also, they expect that the studded jewelry ratio, which is a high margin business for most of these jewelry retailers, that is what is a bit lower on the lower side. As of now, most of their revenues come from gold and silver, so that is what they will be focusing on as well. That is what their growth strategy will be as well. And on the back of this commentary that we have, we've seen Senco Gold surely seems like a strong listing coming in, and cheap valuations compared to a Titan, Kalyan Jewelers, even Thangamalai Jewelry, which is much cheaper than those over there.
All right, so that is Senco Gold for you. A stellar listing, a sparkling listing today on the board. So let's talk about Monte Carlo then. And this particular counter came out with its quarterly update, that is operational update. They say the sales have grown approximately 20% in the quarter gone by. They're saying they strengthened their retail presence with the opening of 11 new exclusively branded outlets during Q1, and they're well on track to complete the shared target opening, complete the target that they're shared of opening about 50 to 55 EBOs in this fiscal year itself. That is exclusively branded, exclusive branded outlets. So that's Monte Carlo for you. When the announcement came of their Q1 performance, you saw the stock see an uptick of as much as 5%. Now it's given up some of those gains. Now it's up only 1.3%.
Okay, still but holding on to those gains of 1.5%. So yes, 1.3%, but let's keep an eye on that. Let's move on and talk about Escorts Kubota on the charts then. And Dhwani, last 6 months, 12% return. What is the story from here on? Last 3 months surely picked up pace in terms of gains.
Absolutely, and what comes to my mind first is discussing the chart of Nifty Auto Index completely as a sector. What we are seeing in this particular overall completely sector as a whole is that the relative strength as compared to Nifty 500 in this particular sector is moving in an upward rising channel, which suggests that the performance is expected more coming out from the auto sector now on. And Escorts is nevertheless always there on the radar, and one can add into the portfolio because the trajectory of this stock is always in an upward rising channel, and one can look at adding into the positions as we are getting fresh breakouts. In today's session, we have also got a fresh breakout coming in. The stock prices are moving above its previous all-time highs, and from the current level also one can go long into it. Over here, a positional target comes at 2450, keeping a stop loss downside at 2300.
All right, and that is Escorts Kubota for you, and that indeed was the last talk on this edition of Market Fatafat. But with that, we are totally out of time on this week's last edition of Market Fatafat. Thank you so much, Dhwani, as well as Amar, Ashesha and Vamakshi for joining us on the show. And on behalf of Vinny, myself, our producer Snehi and our director Trevor, thank you so much for watching this week's edition. We'll see you next week.